And welcome to a new video. This is going to be walking you through a passive income strategy that you can do on any crypto exchange, really just about any crypto exchange, but we're going to be focusing on Mexi. All right, so this is basically going to be a combination of arbitrage and passive income, but probably a lot more on the side of passive income. So what we're going to be doing today is going to be exploiting the funding rate. The way that we do this is we're going to be shorting a coin with positive funding, which means that we receive money, and we're going to be hedging that by buying spot. Okay, so here's how we do it. The first step that we're going to want to do is to look at CoinGlass to see what the funding rates are. If you go to current, this is the current 8-hour funding rate. What I like to look at, you can look at whatever you want, is the daily. What essentially this means is this is how much money you are expected to make on your account per day if you short this token. So what we're going to be doing is shorting AIOT on Mexi and earning about a 1.81% per day on our account. And at the same time, we are also going to be buying spot on this. I'll walk you through all of it. It's really not too difficult. Again, all you're going to do is go to the exchange of your choice, in this case Mexi, go sort by highest positive. We don't want the negative. We want the highest positive. Okay, let's go to the next step for this passive income. So the next step is we are going to open up futures. So I'm going to go here, and I am also going to click spot. You're going to have two tabs open, both futures and spot. Don't forget that. Now, I don't know if we'll be able to see this. I hope this doesn't cut it off, but I'm going to have to transfer because I have all of my money in futures. So we have to make the transfer. Now, for how much to put into spot versus futures, so with this account of 565 with 13 frozen, I'll just cancel the order so that we don't have any frozen. So with this account, as you can see right here, we have this much available. So how much should we use for the spot? How much should we use for the futures to make this play happen? I like to do around an 80%, 20%, or an 85%, 15%. What I mean by that, guys, is 80 to 85% of our money is going to be in spot here, and the other 15 to 20% will be in futures. So let's run an 85%. I think that's good. It's a little bit risky, but I'll show you how to manage your risk too. So 85% of whatever number this is, let's round it up to 579. So that would be 463. I'll round that down. So we are going to transfer 463 Tether. Okay, so we type that in. Transferred. Now we're good to go. And let's go pull up AIOT. So to do that, we're going to type in AIOT. What is it? AIOT right here. As you can see that it has a funding rate right here. I believe that this is the funding rate every 4 hours. And I think that's what this is. This is the funding rate every 4 hours, guys. So it's going to be paying us about 1.76, formerly 1.8 per day. Let's do it. So we also need to pull up AIOT here. You can just put in the ticker or you can search it. Both work. You can put in the URL. You could search it. All of those things will work. Okay. So now we are in, as you can see here, you can see it has a spot pair and a futures pair. You can see the order book here, bit of a spread, but we're going to manage this. Here's the next step. Next step is we want to see how much we can buy. So we can get how much we can buy with a limit order. So let's see how much we can do. So I think that 1100 is perfect. So let's do 1100, as you can see right here, in order to hedge. And then at the other side, we're also going to do 1100. So when you're doing this play, guys, what's pretty important is you need to make sure that the quantities are the exact same for this arbitrage to work, okay? If the quantities are different, you might have a problem. All right, so let's go put our orders out. So what we're going to do is we are going to put a bid out at, so if we put a bid out at 0.39, we're probably going to get filled immediately, which is great, but we can maybe bid a little bit higher. Now here's the way that I like to handle this, guys. Well, I'm glad I didn't bid at 0.39 there. The way I like to do this is I like to use one limit, one market. So what that means is when you get filled on your limit, you just market order on the other. Don't worry, I'll show you how to do this. First one, we're going to put a limit order on the spot pair. So we're going to do that at, let's do 385. Once we get filled here, we'll do a market on the perp. And there's our order of 1100 at 0.385. So as you can see here, we are ready to market order whenever we get filled. Just simple as that. So if we don't get filled at 385, that's fine. We'll just adjust our order. But there's really nothing, to worry about here. So we're going to short soon, but we can only short, of course, when we get filled here. There are other ways you can do this as well. If you are curious, another way you could pull this off is to buy the token on DeFi, to buy the token on a different exchange, and then send it over to the exchange where you're shorting that same token. That can totally work. It's really whatever way you want to do. Right now, you can see that a lot of the bots are trading pretty much in between my bid and the current offer, which is unfortunate. It means I might have to change my order. But it's good for the video because it shows how to handle when, you don't get filled magically at a great price. So, it's fine. Instead of editing, we'll cancel it just to see the market react, the order book reaction. Doesn't seem like there's much of one. So I'll put my order out a little bit higher. I'll do 0.388 and just see if that fills, So let's do 1100 at 0.388. That looks perfect to me. And we can just short at the same time here. So we put our order out here. Hopefully we get filled because it's a bit of a higher price. Yeah. So it looks like we just got filled with 8 of it because you can see this is the dot denoting that this is, my order or your order in this case. So we can see that we got filled with like 0.71%, so really nothing too crazy, as you can see. So again, we're just going to still wait for this one to fill. There are other ways that you can enter if you have to, enter spot and futures. There are other ways you can do it, but, this is the simplest way, I'll tell you that. Another way you can enter is by doing like a TWAP, but not every exchange is going to allow you to TWAP though. So it looks like our order got actually front ran, did not get filled. That's fine. I'll just adjust the order. So instead of canceling here, because I want to make it exactly, that amount, I wanted to adjust it. It's actually not allowing me to adjust it, so I'll probably just buy 0.393 and then go from there. So we're going to have to buy probably about 1092. Yeah, we're going to buy about 1092, I think, or yeah. Okay, let's go do that. So let's go do that at 0.393. Again, we're going to get 1093 AOT. The sizes don't have to be the exact same. It's just you don't want them to be too different, of course. So we're going to buy that there. And you can see we got filled for a decent chunk of it. We got filled with 85%. So I mean, because we got filled by 85%, I'm going to probably want to short, right? All right, so should we short now? Hopefully our order fills, but we'll have to see. Lucky for us that we're actually making a profit. Look at this. The market going crazy like that upward is phenomenal for us, I guess, because we're holding spot, and look at this. This is funny. We're buying higher, but the market's getting better and better because, we bought and we're now in a profit, which can sometimes happen when you're trying to do this kind of like arbitrage trade, right? But that's fine. So at this point, you can either keep your order or change it. We got filled. Done. There you go. And then we shorted right there. So you can see that we are now in the trade. We have 1100. 1100. So yeah, we're totally in. Nothing to worry about. Let's go look at open positions. Yeah, awesome. So we have exactly 1100 AIOT here, and we have short 1100 AIOT here as well, as you can see. So these sizes are the exact same, which is perfect. Where do we go from here? Well, you've just completed the step of getting your limit order filled and also using a market order in order to do this passive income for this kind of arbitrage. Call it what you want. What's the next step? Well, there's an optional next step you can take. I would recommend it, but you don't have to. And it's to calculate the average spread price that you got, also known as the basis price. You don't have to do this, but I think it's going to help you out if you do choose to do it. So let's do it. To do that, we are going to be doing the price percentage difference between spot and the perpetual. So we're going to copy this average buy right there. We're going to put it here. We're then going to subtract by the average entry of our short right here. Perfect. We entered there, as you can see. So all that we're trying to do is just trying to find the price difference, So you can see we did that. And then we're going to divide by the midpoint, but you can divide by either, to be honest. So that would probably be like 0.392 to divide by the midpoint. And the answer is 0.5. So essentially what this means, what I just calculated, it was 0.503. That essentially means that I bought spot 0.5% higher than where I shorted perp. Does that make sense? So essentially I sold 0.5% lower than where I bought this, if that makes sense to you. Why did I get that unfavorable rate? It's because there's just a little bit of slippage, a little bit of illiquidity. It's just going to happen. It's really not a big deal. But you can see how safe that whole thing was. I shorted immediately, right when my other position was filled. So you sacrifice some safety for a worse fill, I guess. Yeah. So as you can see, that is our average. Our average is 0.5%. Okay. Which means that in probably about, I don't know, 2 funding rates, we would break even and be profitable. Okay, final step. Most important part. Let's go. The most important part, if you're going to complete this arbitrage, is you got to protect your position. So here's how you protect it. We need to put a stop loss on this. Now you might say, well, Bennett, we're in an arbitrage. We're in a hedge. Why are we doing that? You have to. It's because the spot pair, this pair over here is not going to properly margin our perp. Okay, so we need to go uncover what our liquidation price is, which is 49. We're going to put a stop loss well before that. So let's just put that out. I'm going to put it with 0.47. I think that's pretty fair. That would actually be, yeah, that's pretty fair. That would actually be a pretty, yeah, that's pretty far away anyway. So what do we do on the spot pair at the same time? I mean, it's up to you, but you could also, you could do something like this if you want to be really safe, to do like one cancels the other, as you can see right here. Or you could put a limit order if you want as well. Right, so I'm going to be a bit safer and do it the right way. So let's do it the right way then. So we're going to do a trigger price of, if the other price is reached, we'll get out of this position, of course. So let's do 0.47, and let's do obviously all of the AIOT. And essentially, this is going to act like a take profit, like a market sell, if that makes sense. So we're going to say, I don't know, down to like 0.46. Now, this might look a little bit crazy at the start, but this is actually just going to keep it pretty safe. You can put these to be whatever you want, but this is safer than me just putting a limit sell order, if this makes sense. Because essentially what this is saying is, look, if price hits 0.47 and, I hit my stop loss here, what's going to happen is I'm going to sell down to 0.46. That does not mean that I'm going to actually sell down the order book to 0.46. All that means is that I'm going to sell immediately, right? I could put it even lower if I want to be very safe, but yeah. So we're going to put that, sell AIOC, and it will say right here, if price goes above 0.47. Yeah, okay, cool. And that is successful. As you can see, we're good to go. So there's one final phase that I think is a pretty good idea. I always like to get all of the tether back into the futures just to give me more wiggle room for my liquidation. So you're going to see my liquidation is 0.49 here. That's about to change once I put in the excess spot here. It's going to go up. Yeah, so I have a higher liquidation. That's how you do it, guys. So we were able to do this pretty safely. The entry was kind of fun, kind of goofy, like price went up, price went down, but we entered. No big issues there. We entered at not a great spread between the two assets, but really not that bad. 0.5% is not terrible, especially when we're set to make about 1.8% a day on AIOT. So from here, what I would say is, if this funding rate, which is what's going to pay us every 4 hours, if that funding rate dies down, I'll just X out of my position. But besides that, this is just a pretty good way to earn some passive income. It's not going to be a lot, but it's not terrible. Now, if you're curious, the final stage of this is how much money are you going to make is probably what you're curious about. Well, it goes back to, remember when I said 80-20 split or 85-15 split? It goes back to that. So my total account, I think, is like $580, right? But my position size, as you can see right here, is, let me go see if it says it here. It should say it somewhere here. 433. Yeah, so this position size is about 433. So what that means is I would earn about 1.8% on 433. But I would not earn 1.8% on my entire account, if that makes sense. Because you're only going to earn this positive funding rate right here on the position that you have. So 1.8%, again, this isn't going to be a lot of money, but it will give you a good idea for what it is. 433. So that is going to be a payout of, yeah, $7.79 a day, which isn't great, but it's also not that bad, right? So what does that mean? Well, that means that my final ROI, which is just this divided by my account size of $580, is 1.3% a day. And that's everything included. Okay? So this means that I'm set to earn about 1.34% a day. That's it, guys. Pretty simple. It's also known as a basis trade. It's essentially just shorting a positive funding rate and buying spot at the same time so that you're able to do this type of mix of passive income, earning from the positive funding rate, because, you know, when you have a short position, you earn positive funding, but at the same time, staying hedged so that, you know, you're not just, I'm not short here. I'm short and I'm long, you know, in spot, as you can see. If you're ever curious about how the overall position's doing, just look at the estimated total unrealized P&L here and here, and that difference will tell you how much your spread position's up, and this, if you hover over it, will tell you how much you make in funding. Nothing yet because the funding rate hasn't hit yet, but that's how you do it. That is it. Best of luck again. Rewatch this video maybe a few times so that you can get the hang of the arbitrage, but you can do this on any platform. Just don't forget to play stop losses for your futures. And have corresponding take profits for your spot so that you're fully, you know, safe and hedged. And if you're curious, like, you can see the annual APY is 658% per year. But if I'm using 80% of my account for spot, then it would be 80% times this would be my true ROI. Yeah, happy trading, everybody. Good luck with the passive income and arbitrage. See you guys.